Welcome everybody to Strategy Now here at MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. Here to wrap up everything that's been going on, the stock market, basically into the midday, into the lunch hour. The major averages are near their highs for the midday. Again, we're looking like we're going to set up for some possible new highs on the close. So let's see. The NASDAQ right now at 48.56, up 14.5. We also have the S&P 500 up 2246.75, up 10.25. The Dow Jones trading at 19,635, up 118 points. And that small cap, high beta, domestically centric Russell 2000 trading at 1384.80, up $22.70. Now, the equity markets spent basically the first 2 hours near flatline. So there wasn't a lot of action. But you saw that the strength started to kick in some of those cyclical sectors that have just held up this market and continued to get to new highs. The market also has been moving to new heights regardless of what the dollar's been doing. This morning on the opening bell discussion, I was talking about the dollar and the dollar strength. It had pulled off initially after the ECB announcement, but now it's trading off of its highs, up about $1.03 at 101.17. So you can see that the strength of the dollar is not deterring the markets here in the United States, and we're seeing that domestic equity markets have just been moving to the upside. Now, the European Central Bank did meet. They did announce that they are going to leave interest rates unchanged, and they're also going to continue their extension of their asset purchase plan. As I discussed this morning, basically what this spells out is this. They are going to continue after March when the plan was supposed to cease. They're going to extend it out until the end of 2017. They are going to be buying roughly 60 billion euros in assets per month throughout the remainder of the year. While that is cutting back from its 80 billion a month, it is an extension that's a lot longer and more in terms of dollars than what was expected, which was 6 months. In other words, until basically through September of 2017. So they added about a 60 billion euros into the asset purchase plan into the end of the year. It is a taper, but it's quite dovish. So the markets in general have been responding extremely positively, especially if you look at the currency markets. The euro initially spiked on the news and then has pulled off its high of 108.75. It had a 270 pips slide down to the 106.03 level. Now, for those of you that aren't able to access currency markets or the FX markets in general, take a look at FXE. That's an ETF that tracks the euro, and that's where you can actually stay abreast of what's going on with the euro currency. But right now, showing weakness in the midst of the strength in the U.S. dollar. Now, 5 of the 6 cyclical sectors are holding up some pretty decent gains, with the financials leading the way. The sector's up 1%, and technology is also right behind, up 0.6% as a sector. Together, these sectors represent about 35% of the S&P 500, or in other words, if you just look at the whole entire market. And the strength has gone a long way for offsetting the weakness that we've seen in some of the laggards. Consumer discretionary is not one of the laggards. As a matter of fact, the sector is holding up quite well, up 0.2%. It's just trading behind the overall market and the 2 leading sectors that I had just pointed out, technology and financials. This has also masked, though, this little bit of lagging of the overall market pop. 2 names that I think are notable. One we talked about last night in Tech Talk, which was Lululemon. Lululemon had earnings and guidance. They blew it away. Their consensus results and guidance were off the charts. The stock is up 15.9% at $69.39, up about $9.55. That's actually about 2 times what we were calculating as its estimated move going into the earnings announcement. So it's a big move in Lululemon, but they beat on their guidance and the results. So really solid outing there. Taylor Brands, ticker symbol TLRD, also solid earnings, solid guidance. Stocks up 39% at 26.41, and that's up $7.48. So we have some retailers that are really moving to the upside. Let's see if that's actually going to build some momentum in this sector going forward, especially in this holiday season. Taking a look at home builders, and the reason why I want to look at there is they're, in spite of the fact that we saw that interest rates look like not only domestically but globally are going to be moving to the upside, home builders, this discretionary area has continued to increase in the face of rising interest rates, which typically would be driving this particular sector down. If you take a look at the home construction ETF, ITB, it was up 56 cents, or roughly around 2% at 29.11 today. And that is after we saw disappointing earnings from home builder Havana, HOV, down about 9 cents. Now, yes, this is a $2 stock. You can consider it basically, in my world, a relatively inexpensive option, but that stock is down on disappointing earnings. Well, I'd say inline earnings, but light on the revenue side, down 3.6%. So we'll keep an eye on that, see if maybe there's some profit taking after we see what's going to happen next week with the Fed and raising rates here. On the downside, though, we did see that the industrial sector is lagging. It's down about 0.3% as a sector, and it's been under pressure by some defense names. Lockheed Martin being one of the most notable ones, ticker symbol LMT, trading at $259.57. It's down about $6.81. We also saw General Dynamics, ticker symbol GD, trading at $174.78, down $3.65. Now, these two names are weighing on this sector, and it's likely due to concerns that President-elect Trump may continue to express some displeasure with the defense contracts. We're going to call this the Trump effect. This is what everybody, after the carrier deal has gone through, that they're worrying about. That maybe when Trump gets angry or is discouraged with some of the elements of a deal that he doesn't like, well, those companies can come under scrutiny. Very interesting. Some counter-cyclical sectors like healthcare, unchanged today. We've seen some weakness. It's firming up here. Consumer staples down about 0.1%, and utilities down 0.1%. And I guess, the losses make sense, but the overall group has really tourniqueted off some losses that we've seen over the past few sessions. And I think they're just benefiting from the overall strength of the market, even though that treasuries right now are sitting at their basic lows. Looking at the 10-year yield, it's up about 5 basis points at 2.39, so 2.39%. Those yields have been raising. Typically, that will put some pressure on the counter-cyclical cycles, but they're holding up with this general strength in the market. That's it for today's strategy. Now, join me at 3:30 Eastern Time. I will be covering in Tech Talk some earnings announcements that are going to be happening after hours. We marry option pricing that gives us a forecast of what the stock could potentially move in the future, and we'll look at charts. What are they telling us as far as trend and what's been going on in the past? Till then, we will see you later. Have a great rest of the trading day. Take care.